Well, good day, all. Ira Epstein with your evening stock spider ETF update for this March 3rd, 2026. So, the Mortgage Bankers Association, well, they're going to update their weekly U.S. market indices at 6 in the morning. We'll see what interest rates do. As you know, up until the war that began on Saturday, rates had been falling. They've certainly dramatically seen a turnaround since then, I'd assume. ADP February U.S. private job sector, well, the net change data will come out at 7:15. Analysts are looking for 50,000, which is way more than the 22,000 we recently saw. And the ISM will release their February service sector index at 9 in the morning. They're looking for it about unchanged at 53.5 compared to the January number of 53.8. And looking at the markets, they certainly rebounded. And this is what I was talking about early in the morning. One of the things you have to understand in a wartime environment, you've got to give the market a few days to adjust to it. And we've now had a few days, and we really have had Monday and Tuesday trade. And while the markets are down, the markets are trying to get some friction holding on the downside. I'm seeing that in a number of different areas. Goldman Sachs came back, think about it, $40 off the low today. Google has been falling, but it's going to continue probably to still slip a little bit here. Same with Restoration Hardware. These have been down markets. Home Depot's not doing well in this environment. But I would think that, once we get a couple of weeks into this war, whenever it's going to end, why would that matter with people in the spring going and starting to do their home repairs and everything? So I'm looking for lows in that market. NVDA closed towards the high, not the low, after a good size break. Gold market was down $21. Silver miners were down. Copper was down. Silver was down. So you got to beat up markets all through there. And while the stock indices were down, you could see in QQQ, you're just off the highs by $2. When you come over to the Dow, same thing. You're just off the highs by $2. And SPY by the same. So they gave up the big breaks is the point that I'm trying to make here. And I look for more of that. Why? Because we got down to Bollinger Bands, key moving averages with Bollinger Bands, and the market I thought was ready to just try to hold them. You don't abandon the standard thinking you have in markets just because you're into a wartime environment, has been my experience. So when we look at Cloudflare, as you can see, it's not falling out of bed with this whole market. The market's been in a downtrend. And if you take a look, it just flipped itself around yesterday. We had been with the lower highs, lower lows. Not today, but yesterday you had the turnaround, and you haven't violated right here. So until the market takes out 166.68, where could you be going? Well, the 18-day average. And notice you're staying right there and fighting the battle at the number. If it can pick up from here, the resistance in terms of moving average is the 100 to 200-day average. And if you look at the Bollinger Band, it fits in right with that. So that whole area is the resistance point, and what you don't want to take out if the market's going to be looking good here is not to take out 166.68. And momentum is trying to pick up, not down. It's off the oversold condition. Caterpillar down to major support, challenging today. Didn't quite get to the lower Bollinger Band. It missed by about $1.15. But that's the zone. And are you getting oversold? So as I step over to the market right here, not yet. So you're still in a downtrend. The market, to negate the downtrend on the current pattern, would have to come up and take out right here and get itself over 751.49, and even then it wouldn't turn bullish again. So I'm not that friendly. IGV, I told you as I circled this trade before I even left Chicago for this short week that I'm off, you can see the market lost its reading. Thought it was going to come back up, and now I'm telling you it's stuck in here. That tells me that the next move is probably a big up move, not a down move. Why do I say that? Because you've fallen so much. And there's a number of the tech software stocks that have gotten beat up so bad that they're probably down to more reasonable PEs. I'm not saying they're all that way, so don't read into that. But the chart action makes me feel that. In Apple, the market backed off under both the 18-day average of closes in red and the 100, but it's holding the swing line pointing up. The bias is down as you're under that. You're in no man's land. You're sort of sideways. Energy transfer. I'm looking for support on a pullback to the 1859 level. As long as you don't take out 1834, I think you'll see the pros buy the market. And if it takes out 1834, they'll probably bail on the positions. That's just a guess, of course. In Google, I've been bearish, and now I'm looking for where's the value area. And I think in terms of a chart, if you took the names of this off like that, just move it away somewhere. You're down to an area where you're at the 100-day average in the Bollinger Band. That is a zone that I look for the support to come in on the marketplace. When we look at Rivian, lower highs, lower lows, and the market fighting a battle at the 18-day average of closes. In lows, we have a higher high, lower low, and we'll see if the market comes down there. Don't know about that. In XLF, we have lower highs, lower lows, and as you could see, the market hit the Bollinger Band, and when it's down there, I know the tendency of people are to get crazy, and they go, oh, this market's going to crash, it's going to keep coming down, and my job is to tell you, no, that's not the way to think. That is the spot that the pros are probably covering all their shorts and walking away, not a spot where they're necessarily going long, because the trend and the bias are down, period. But you hit the number, and when you hit a Bollinger Band, you only stay out of them 5% of the time. In XLI, this was important. As we get to the XLI number, if you take a look, you had still had an embedded reading on the second, right? Today is the third. So as you and I step over here, we can see that the market lost the embedded reading, but you're right on the objective. There's nothing to be said. The market, I look for it to form something of a trade bottom right in this area. In XLE, here you just lost the bullish embedded reading on the energy. So the only time it can get it back without going through the whole new process is the day after it's lost. So what the trade will look for if it does that, the odds are that before the market takes out 57.88 and it goes to 56.52, it's going to go down to wherever the 18-day average is, and that number will rise. It won't stay at 54.68. It's going to come up a bit, and that will be the objective I'd have on the market. In GLD, so what we have here, sorry about that, don't know why that came up, it's going away. All right, what the market did there is it's got the higher high, the lower low. I call this pretty neutral. It went back to the 18-day average yesterday, if you'll recall. In fact, Monday and Tuesday, if you recall this. As the market came up, I know I was on Sunday night telling people, don't buy the rally and sell the break in this, not just gold, but all this stuff that was going. It's often very treacherous, and it turned out to be that way. So now the market's back to neutral. It's neither bullish nor bearish right where it's at. In Walmart, the market has come back to the 18-day average. If it were a normal market, I tell you to buy the market at 128.76 with a straight stop at 125.69, and I'd be telling my clients to look up for this number. But, we're in a wartime market. It's things you watch. My job here is just point out what I think the pros might do in the marketplace, not what I would do. I do that for my paid subscribers. In Microsoft, same thing. Look at how the market's suddenly coming together here. I think the worst is behind Microsoft. You hear me talking about IGV, same thing in that. So I'm looking for the market to get up and challenge the upper Bollinger Band. And the longer it goes sideways, the more bullish once this war is over I get on these stocks that have been terribly beaten down. And you've been beaten down in Microsoft since hitting a high on October 28th of 553.72. And here, right now, you're closing at 403. So it's $150 lower. That's quite a bit of the value that it lost. And I like what I'm seeing in this. So I think you're going to start seeing the pros, if they're not doing it already, buying these markets to put away. They're buying, in my opinion. BND, you got hit pretty hard today. Why interest rates got hit as hard as they did is still beyond me, but it happened. And the market gapped sharply lower, as you could see, from and this was Friday, obviously. There's a gap in this whole thing. I think the market will try to fill it. In the dollar index, I could see the market filling something of the gap here. It's over the upper Bollinger Band. I doubt it'll stay there. If you close under 79 in the slow stochastics, I look for the market to return to the 18-day average in the flip-flop in FXE. So these are exciting times in these markets, ones that I think you try to take advantage of. And one of the ways you do that is getting our free offers. You can move your cursor up to the top here. If you're watching me on YouTube, you can just go to the top right as you watch it. You'll see the icon there that tells you, hey, just come right here, and you can click on it. It'll take you to our webpage, or go to iraepstein.com and do it there. I'm Ira. Have yourself a good evening. Talk to you all later. Take care.